The pandemic has been a worldwide financial headache, and now you face the challenge of producing annual accounts that tell the right story and provide a true and fair view. So what are your main concerns? Hold on to your seats for a rapid review. Let's start with revenues. Many businesses' revenues have taken a massive hit, and this will show in the financial statements. Remember, you must recognise revenue only when performance obligations are completed and if there's a good chance of collecting it. Next up, government grants. Always read the conditions attached. For example, you can't usually recognise a grant as income until it's been spent on the relevant activity. Oh, and if you have government-backed loan schemes, disclose them. Now, what about assets? You may see a substantial drop in assets recoverable amounts. Are these one-off or might they be reversed? Under IFRS, you can recognise the reversal. Under US GAAP, you can't. If you're capitalising borrowing costs and have suspended active development of qualifying assets, you must also suspend capitalisation. What about inventory values? You may not have perishable goods or seasonal product lines, but if you've seen a fall in sales, these could still be relevant. And don't forget, with IFRS 16, you're now reviewing leased assets too. Is there goodwill on your balance sheet and is it correctly valued? You need to decide whether any decrease is temporary or long-term. But don't even think of recognising an increase, that's strictly against the rules. Not fair, eh? Okay, next is provisions and contingencies. If the pandemic has affected your company's ability to deliver to customers, you could be faced with increased returns, warranty payments or legal claims. What penalties are built into contracts? If a contract is likely to become onerous, any losses must be recognised in the P&L as soon as you foresee them. On to employee benefits. 3 in particular: holidays, pensions and termination payments. If employees are allowed to carry over significant amounts of unused holiday, an accrual is required. If you run a final salary pension scheme and it takes a big hit, you need to account for the shortfall. If you've committed to paying termination benefits, these must be provided for even if they haven't happened yet. Nearly there. Trade receivables. An increased risk of non-payment may mean recognising an impairment in the P&L. Are you or your debtors struggling? And last, but by no means least, going concern. If there's any doubt that the business can continue to operate for the next 12 months, it's vital you disclose this. So there's a lot to think about. If your organisation has proved resilient in all these areas, it's one of the lucky ones. If not, then follow this advice to account for coronavirus. It may not make you the most popular person around, but it will ensure that you give stakeholders a true and fair view.